Hi there, welcome to Markets Tomorrow right here on 89 the Momentum Center. I'm Kanveer Gill, and really it was about a quiet session in trade with a 0.5% tick up for the benchmark indices, and for the broader markets also there was good headroom. What was interesting was the market breadth, which held steady in the favor of advancing stocks. And drill it down to specifics, it was really about banks garnering a lot of investor interest through the course of the trading day. Adani Port was a top gainer, up 4%, but ICICI Bank has been the star performer of the session, as also for the week, given what the stock has done, gaining 10% plus over the last two trading days and seeing abnormally high volumes over the last two sessions. And then, of course, the entire banking space looked decent. You had laggards in IT as well as autos. Let's do a quick recap then of the top stories on the markets desk. Nifty builds on a gap up start, ends the day just short of the 8,700 mark. In fact, banks pretty much led the way once again, despite a global caution coming ahead of the ECB's stimulus review later today. Meanwhile, Yes Bank perked up in trade after it handed in actually a very strong set of earnings for the second quarter. Both profits and net interest income beat estimates. Asset quality remains stable, which was very encouraging, and which is why the stock closed about 1% plus higher in trade at 1308. Another strong quarter coming in, the first one being reported after RBL Bank got listed. And the newly listed lender reported not just strong net interest income growth, it also witnessed a marginal increase in bad loans. So that was a bit of a question mark among earnings. But higher other income supported profits, and which is why it lifted sentiment on the stock, which was up 4.5% at 328. Quest Corp notched a handsome rally following robust show again in this quarter's earnings. The company has agreed to acquire minority stakes in two Bangalore-based companies and a majority stake in a Singapore firm, and that kept the stock afloat, in fact high by about 6% in the trading day today. We'll talk about the markets as we go along. The question that we're essentially asking is, will the markets celebrate the festive cheer? Getting into next week, will we see more upside to the markets? And will Diwali really pave the way for the markets to actually make a serious dash at the all-time record highs once again for the benchmark indices in Nifty and the Sensex thereof? Mayuresh Joshi as well as Ashish Chaturmurthy both join us for a 360-degree perspective. Ashish, I'll start off with you. Technically, how are you viewing the market trend?
Yeah, hi, good evening. So definitely, markets have taken a strong support around this 8,500 level, and which we have been cautioning that this 8,500 level is a very, very important level, and if it breaks this 8,500, then there is going to be huge liquidation of the long positions, as well as creation of fresh shorts may start happening once this 8,500 breaks down. But surprisingly, market has taken a strong support at 8,500 levels, and in last two trading sessions, we have been seeing a shift from input writing from 8,500 to 8,600 levels, and now this 8640, 8650 will continue to act as an important support zone. On upside, I think markets are heading towards 8850, 8900 kind of levels if this 8640 levels sustains, and particularly the banking space is looking very, very strong. So after a long time, we are seeing a good amount of a long build up happening in most of the PSU names like SBI, Canara Bank, and and PNB. Apart from that, we have witnessed a very strong build up happening in ICICI Bank, which may lead to a lot of buying interest coming back to stocks like Axis Bank, even for that matter HDFC Bank can see good amount of interest. So overall, I think banking space may contribute well for this rally in the market. So overall, I think buy and dips would be the strategy until 8640 is not broken. Overall trend looks good for 8850 to 8900 levels.
Right, Mayuresh, do you think we're in for some more upside, a brief rally into the Diwali season?
Evening, Tanveer. Again, the optimism on the Indian market continues, specifically on my side. If you look at the kind of declines that we probably witnessed, it's more to do with global volatility at this point of time. And largely, again, I think the outcome of the US presidential elections is what everybody's talking about at this point of time, whether the Fed is going to raise its rates in the December policy, and what really happens if there is a perceived hard landing happening out of Brexit over the next few months. So largely, I think it has been global in nature. Domestically, I still feel we're on a very strong footing when it comes to either our forex reserves, our macroeconomic policies, or even the recently concluded earnings that we've probably seen. So earnings are expected expected to bounce back by the end of Q3, Q4. And my own sense is that in the second half of FY17, first half FY18, you'll see strong earnings growth rebounding. And again, I think once the capex cycle picks up, you're probably going to see further traction happening, specifically with corporate balance sheet strengthening. So I think my optimism on the Indian market continues, and I feel that Indian markets are on a strong footing. So any decline, I think, should be taken as buying opportunities. You have to be selective in your stock picking, but again, I think the markets, in my opinion, are headed higher over the next few months.
Let's talk about the story makers in the session today. Yes Bank on earnings, Mayuresh, is there more upside, or do you think the stock has run its course, at 2.5 times price to book, which is the future benchmark on valuation? It's stretching it a bit?
No, largely I think the earnings were extremely strong. Loan growth in excess of 37%, deposit growth in excess of 27%. They've maintained their NIMs. The asset quality has been largely stable. So to that extent, I think tick marks on all parameters that one probably looks at. The credit cost parameter also has been taken well by the markets. But yes, I think as you're rightly pointing out, I think the valuation perspective a little too stretched at this point of time. So even if you assume a book value of 425, 430 rupees on an FY18 basis, I think it is still trading in excess of 3.1 times FY18 price to adjusted book. So in that sense itself, I think the growth momentum should continue. The QIP that they've announced, the process in which they'll do this, because I think the growth capital is required for Yes Bank with Tier 1 staying at 10.1, and to fuel such kind of balance sheet expansion, I think they need to raise money. And again, I think if they're successful in doing that, I think the balance sheet expansion should be quite strong. So again, I think the valid parameters for the bank on course, but valuations again looking fair at this point of time.
And very quickly, your call on ICICI Bank, do you believe that it's pretty much going to rise from the ashes now, where there would be a marked shift in perception for ICICI Bank?
So again, Tanveer, I think I have maintained my positive optimism at lower levels for ICICI Bank. And in terms of its corporate lending book, what you've probably seen with the SR deal, the deleveraging happening on most corporate balance sheets, the kind of stress that we've got used to for banks like an ICICI and an Axis, I think that stress will slowly and gradually start coming down over the next 2 to 3 quarters. Yes, credit costs will remain elevated in terms of the drill down list and the kind of watch lists that they've put for 38,000 odd crores for ICICI Bank, 25,000 crores for Axis Bank. So to that extent, I think even if we built in or model in 200 bips of credit cost for ICICI Bank, 160, 180 bips for Axis Bank, these costs should start reversing in the first half of the next fiscal year. And as credit growth resumes, because of their strong operating leverage with their branch network, with the kind of capital adequacy that they've got, and absence of interest rate reversals, the NIM should get stabilized and expand going forward. So yes, I think I am maintaining a positive view on the larger private sector banks.
These stocks on the charts?
See, as far as ICICI Bank is concerned, I think it's going to be in a structural uptrend, because the stock has reversed from the lower levels with a very strong volumes as well as open interest addition. So clearly, I think the base has been formed in the stock, and now on downside, I believe 255, 260 will continue to act as a flow for the stock, and on upside, I think this stock has a potential to test minimum 300, 305 kind of levels in short to medium term. So overall, any dip in ICICI Bank towards 270, 260, it would be a buying opportunity. Positionally should keep a stop below 255, and on upside can look for a target of 310 levels.
Okay. Mayuresh, do you think Reliance can go past its resistance of 1050, 1100 odd?
So again, largely I think, Tanvi, the numbers will be out any time, and expecting strong show coming in from their petchem business. But their two core businesses, petchem and refining, are expected to do well. in the next few quarters as well, with a huge amount of capex done in its core businesses, whether it be the petcoke gasification facility, the off gas cracker. I think they're definitely going to incrementally add to the earnings of Reliance. Secondly, I think even on the telecom part, the kind of investments they've done, $21 billion so far, and though I think analysts are not pegging in any numbers in terms of the telecom business per se, my own sense is that over the next 2 years, even this business can be value accretive. Obviously, one has to look at numbers in terms of how they are successfully able to drive up their subscriber base and what kind of revenues can actually come down specifically from the data part in terms of volume growth. I think those will be the few key parameters to watch out for, but refining and petchem, in my opinion, will continue to do well for Reliance on an operation front.
Oh yes, indeed. That's a quick view coming in on Reliance. Adani Port, was up 5%. Ashish, do you see a trend building here?
Yeah, definitely. I think it's a clear breakout on the weekly, monthly charts about this 274 mark, and I think this stock is poised for a move towards 305, 310 levels, and positionally I'll not be surprised to even see stock crossing this 320 mark over a period of time. So overall it's a good bet considering a short to medium term view, and on downside I think 273 will continue to act as an important support, so keeping that as a stop loss, one can initiate a long position in Adani Ports.
NBCC was the other one, and the offer for sale has been well received. Mayuresh, given where the stock is at 250 odd, is it still a buy?
Clearly, the story continues for NBCC, Tanveer. Order flows till date close to 4,500 crores. Total order book stands close to 70,000 crores. The management expects this order book to keep on burgeoning to around 80-85 crores by the end of this fiscal. So I think it gives good revenue visibility for a company like NBCC, and predominantly even within this order book, PMC takes the lion's share. So I think PMC margins have held up pretty well between 7.5-7.8%, and with the kind of cash flows that we're used to, because the kind of money that they get upfront from the clients, and with elongated credit periods, I think the negative working capital cycle along with cash-rich balance sheet of close to 1133 odd crores by the end of March 31st, 2016, I think that definitely augurs well in terms of how the return ratios will pan out. Obviously, yes, I think execution will be your key parameter for a company like NBCC, but looking at their track record, I really assume that top line growth should grow anywhere between 29 to 30% over the next 2 years, bottom line growth anywhere between 24 to 25 odd percent, and from a valuation perspective as well, I think there is still ample scope for earnings to improve. So yes, I think I maintain my positive view on the stock.
Then we take a very short break right now, but when we come back, it's full focus on how to approach trade tomorrow, where the markets would react to Reliance's earnings, and also digest HCL Tech's numbers as and when they hit the screen around market open. So take a break right now, hear out Vikas Khemani's views on the market, and come back for more perspective.
It's a classic consolidation phase which is going on, and I would believe that it is making setting the ground ready for an up move. Again, I am mentioning from a medium term to long term perspective, because as and when the copper earnings starts picking up, you will see newer levels getting to the base level. Some of the mid cap IT companies we think are better placed in terms of valuation, in terms of dividend yield. Some of the companies are trading at 3 to 4% dividend yield, and single digit valuations. So I think again one has to kind of keep looking at these factors, but if I were to take again a long-term view, as you asked about 3 to 5 years view, unlikely that IT will deliver the same return as some of the domestics, because the growth factor would be far higher in domestics than IT, and markets or investors typically tend to reward higher growth than really value with the lower growth. Once the subsidies have been taken out, and you will start seeing all downstream companies, whether it is likes of SPCL, BPSL, or in gas sector, where we have city gas kind of companies, and so all oil and gas downstream companies, in my opinion, will deliver good returns in times to come.
HCL Tech is an important set of earnings to watch out for tomorrow. Sunita joins us with a quick preview on what to expect.
Absolutely, after TCS and Infosys pointing that the demand outlook is not looking that great in near term, it is now HCL Tech's term to we need to watch out for the commentary. But having said that, this is among the tier 1 companies, this is the company which has the most clear visibility of revenue growth. If you look at the guidance they had given it for FY17, they are expecting a 12 to 14% growth in constant currency. They are likely to maintain the guidance for FY17 at the end of Q2. As far as Q2 performance is concerned, we are expecting a 2.6% growth in constant currency. There will be a cross-currency impact because part of their revenue comes from Europe, so there is 80 basis point impact, and the reported dollar revenue growth will be 1.8%. Margins will come under pressure because of the wage hikes, but we need to watch out for management commentary as far as the deal wins is concerned, how they are likely to improve on their digital contribution, and what kind of growth they are likely to see, especially in the mode 2 and mode 3 that they point to the strategy they given out in the analyst meet.
Thanks, Sunita, for that. Mayuresh, do you think HCL Tech would say or do something different from what you've heard from Infi and TCS? Mayuresh, that question is for you. Ashish, you want to take that? Technically, is it, a period of lull for the IT majors?
See, definitely it's a period of lull for most of the IT names, but if you look at particularly HCL Tech, this stock has been consolidating for last few weeks in a range between 850 on downside to almost 740 on downside to 850 on upside. And I think the way this stock is consolidating, it looks like this stock is going to see a clear breakout above this 850 mark, and once that happens, I think this stock is poised for a move towards 940, 950 odd levels. So I think any day would be an opportunity to go long in HCL Tech. Maybe I think if you look at other IT names like Infosys or TCS, they have already shown a good amount of correction, but consolidating at a lower end of the range. But HCL Tech, I think, can show a strong outperformance from current levels. So overall, it's a buy on dip kind of stock where I think 10 to 15% upside could be seen on higher levels.
Okay, ACC is also coming out with numbers. Vivek joins us with a quick preview. Vivek.
Well, after Ultratech, now it's the turn of ACC to come out with its numbers. Ultratech was a strictly inline quarter. If you look at ACC and what the expectations are from this particular stock, revenues are seen down 4.3% on the back of muted construction activity, so not too much cement volume offtake seen as far as volumes are concerned. Talking about the profits are seen up significantly higher, almost 46% higher, mainly on the back of the fact that strict cost controls and also lower petcoke prices for this particular for the cement universe in general is seen aiding margins as well as the profitability higher. Now talking about the volumes, the street actually expects the volumes to decline, because the company actually had to undertake a certain amount of production cuts, mainly to support the pricing. Now remember, in the north and west region, if you're looking at it, pricing was actually quite sustained and quite strong. And if you're talking about the east and southern, not so much, but still prices have held out quite well. If you're looking at what is generally a weak quarter for cement companies in general. Now if you're talking about it, some of the key things that the management we would be looking at from the management is that how the Chhattisgarh unit plant is performing after the unit expansion, and also one thing very important to watch out for would be the impact of the rail freight on back of the coal movement that has been undertaken and how it actually impacts the margins.
Okay, very quickly, Ashish, on ACC as well, cement has taken a bit of a backseat.
Definitely. This is what we are witnessing since the month of August, when the stock made its all-time high, its high around 1740 odd levels, and right. From there it has been consolidating between 1740 to 1610, 1612 levels. It is on a lower end of the range, so maybe it may see an extended consolidation at current levels, but till it doesn't see a clear move above 1650, 1660, I would avoid going long in the stock.
You have 30 seconds, Ashish. I need to wrap up the show. What are the strategies for tomorrow?
My first pick would be Jan Irrigation. Now, if you look at Jan Irrigation, this is one stock which is showing a very strong, consolidation at a lower end of the range. Right. We expect the stock to see 10% upside from current levels. One can initiate a long, keeping a stop below 98. for an upside target of 112 levels. And the second pick would be a long call on Tata Chemicals with a stop below 553, and an upside can expect a target of 600 levels in next 2 to 3 trading sessions.
And a buy on ONGC as well.
Yeah.
Okay, thanks very much Ashish as well as Mayuresh for taking us through your insights to the market. We'll wrap it up on markets tomorrow. Reliance Industries Q2 earnings report card coming up next.